The Fed is expected next week to continue to increase rates another quarter point. The CPI report came in last week at 2.9%, which was lower than expected. Expected was around 3%, 3.1%. So a year has made a huge change in the market. But at the same time, we're seeing the CoreLogic report coming out saying that markets here in Florida, including Port St. Lucie, have a very good chance, over 70% chance of losing equity. So what does this rate increase that the Fed is about to make going to mean to the real estate market and to mortgage rates? Where are we heading with mortgage rates? Also, what mortgages can you get right now to offset some of these high rates? We're going to talk all of this with our good friend Brent Starts from Unitas Lending, so don't go anywhere. Hi, my friends. If this is the first time you've been to my channel, my name is Lee Brickey, and here on this channel, we talk everything real estate in Palm Beach County and the Treasure Coast. So if any of that interests you, you're going to want to subscribe. And for subscribing, here's a picture of Henry. And without wasting any more time, let's go ahead and bring on Brent Starts. All right, Brent, thanks for joining us today. Appreciate you coming on to help us figure out what's going on here with the CPI report and the market and where rates are heading today. So let's talk a little bit about the Fed and what they plan on doing this week. So the way I understand is the consensus is across the board, they're going to raise rates again another quarter point.
That's correct. On Wednesday at 2 o'clock is when the official announcement will be made. And then after that, 2:30, there's a press conference. And so there's three reactions to the initial statement. We'll move the market a little bit as far as mortgage rates are concerned. Then as the press conference goes on, we watch it live. And sometimes you'll see some movements there depending on what the questions are and how the Fed, head of the Fed answers those questions, Jerome Powell. And then the third reaction is actually the next morning after the market sleeps on it. So, but we'll definitely, that's the big news this week, no question.
And where do you think where do you think it'll send mortgage rates?
You know, right now the quarter point is baked in. So if they came in at a half point, that would be a complete surprise. Rates would go up drastically. If they pause, rates would go down drastically. So it's pretty much an 85, 90%. There's actually futures market for the Fed. And so we estimate that there's about a 90% chance, if not higher at this point, that the Fed's going to raise at 0.25%. So mortgage rates are already assuming that. So today's interest rates being Monday, that's the assumption right now. So just a surprise is what we're looking for. And the markets are really been flat since Friday because there's really been no substantial news coming out in the last 3 days before it. And the Fed governors are all quiet. Just so you know, there's a 10-day silent period where they don't speak at any economic forums or anything like that, or college campuses or anything. And then that gives you kind of the markets a time to kind of prepare for that. And then Wednesday, Thursday, and Friday, it's a busy week as far as all reports. GDP is coming out Thursday, and the personal consumption expenditures report, the Fed's favorite grades for inflation, more than CPI actually, is coming out Friday. So it's a very busy week this week.
So we'll get on that next week. Let's talk about what happened over the last week with CPI reports. And I'm going to share the screen here. All right, so let's take a look at this consumer price index here. So this is year over year. This is Charlie Below's charts that we listen to. Charlie's a super smart guy. We'll leave his information so somebody can come and watch this video after the fact. If you want to spend half an hour watching it, it's really good. So anyways, Charlie does these graphs, and he's showing here the CPI, core CPI, sitting at 4.8%, but the year over year, and the CPI year over year is at 2.9%, which actually came in lower. They were expecting it to come in at like 3.1%, and actually came in a little lower. And this is This is inflation without energy and food. So this is where we are today. So we're moving towards where the Fed wants us to move. I mean, obviously, what they've been doing is working. No matter what you think about it, it is actually working. So a lot changes over a year here. So where do you see mortgage rates following this eventually?
Well, in our world, we look at the month over month as well, CPI, and that's reported at the same time the core and the CPI index year over year is reported. And what we're seeing is the months that are falling off. That's why you're seeing such a drastic decline, and we know it's going to go down because you can see 12 months ago what months are falling off. And so the all-time high was actually June of 2022. So we've been going down steadily since then, and in continuing to get rid of those higher months. And with new months coming on, in that two handle, we're going to be right around there quickly. So we think that the bond market's saying this actually, that it's an inverted yield curve, and the quick explanation of that is 2-year yields are higher than 10-year yields. In other words, an investor that buys a mortgage, because your mortgage is someone else's investment, someone's a 10-year treasury, in other words, and the mortgage industry models or mirrors the 10-year treasury. It's not controlled by the 10-year treasury, but it's a good gauge because it feels like a mortgage. It's guaranteed by the government, which is comparable to real estate, where there's full underwriting and all of that. So it models that or mirrors that. And then right now you've got 2-year money, with returns offered from the federal government that are almost 75 basis points or 3/4 of a point higher. So the market's saying, hey, we know that right now a 10-year treasury is going to be a bargain at 3.75%, 3 years from now. So we're going to get that lower return. We're going to be okay with that lower return, a lower return on mortgages right now, because we know that rates are going to be coming down. So as these months fall off, Lee, the months that to make up that 12-month year-over-year figure, when those higher months continue to fall off, we know it's going to continue to go down. There's no question about it. Mathematically, it has to. So we're seeing interest rates coming down already in response to this, to answer your question. And so we see that in the big picture. It'll be a choppy ride down, but they're definitely coming down. They have to.
Right. So you see rates going, maybe fluctuating back and forth a little bit, and then eventually coming down.
Right. And I think the big picture, a lot of the talking heads out there that really are good at estimating these things, or some are saying 2% in the next 2 years. It'll be a choppy ride to get there, but I think I tend to agree with them. At some point, we're going to see substantial move down as inflation gets under control.
Shelter coming down with rents. I think that's a good thing right now. In some states, California right now, a lot of places it's going back the way it was. It's cheaper to rent than it is to buy. And depending on where you are in the market, it could be the situation for you too.
Yeah.
In Florida,
Yeah. Having come from California 13 years ago, I can tell you that was normal. It was much less expensive to rent than to buy there. I mean, it was really pride of ownerships, and you're thinking it's a 20-year deal when you go in. So
right, exactly.
It makes sense. Yeah.
So here's market expectations for the Fed. This is from Charlie also, where this is coming from the Fed though. So they're expecting 2025, the Fed's fund rate to be somewhere around, 3 3/4. So where are you at on this?
Mortgage rates tend to hover about 1.75 to 2% above this in recent years. So I would say this is a pretty good estimate as to what's going to happen, because like I say, it's going to be a little bit of a topping out here, this over the next several months, and then we're going to see as the Fed funds, start to be cut. I don't know if they're going to start cutting them. I think they're going to hold them up higher, but the mortgage market is going to anticipate those cuts that are coming because they don't wait for them. They look at inflation. They look at all the retail sales slowing down. They look at the jobs market. They look at everything as it comes out throughout every week. Multiple reports coming out, and it's already indicating that they're going to go with lower rates, or rates are going to slowly go down. Choppy ride, but it's coming down.
Yeah, all good news.
All right.
News. So here's the bad news. So when rates were 2.65%. This is based on a 20% down 30-year mortgage at property tax at 1.25%, which Palm Beach County is 1.6%, and then Port St. Lucie is 2%, and then Martin County, where you are, is actually the cheapest. It's under 1%. It's 0.98%, I think. Right. So I am pretty sure that's what it is. And then 5% for homeowners insurance. If you're buying anything under 5 years old here in Florida, you're going to get the best rate. So we'll talk a little bit more about that down the road. And then no HOA dues. So So a $750,000 home would have cost you $3,000, and today it's 6.95%, where we were just a week ago, right?
Right.
That same 3,000 is buying 444,250. So where are we at today, Brent?
Yeah, we're in the 6.7, 6.8 range right now, but starting to moderate, so that's a good thing. The choppy ride down we talked about earlier, we're going to see that continue. There'll be days when it's up and days when it's down, but generally speaking, what we're seeing is individuals are frustrated because of the prices they have to pay now and the higher rate. When the rates come down, though, of course, you don't necessarily marry at the interest rate. You're marrying the property, and so the opportunity to refinance is probably 18 months down the road.
Right.
That's the way I see it. You're going to see rates, probably in the low fives. So
when we're going to get more into this in a minute, but if you're a first time buyer, me personally, I think it's a great time to get in the market. Just not get so picky and find yourself a home so you can get involved with the equity as the market turns and starts to move up again, which in some markets it is. I mean, we're going to talk about that when we go through the CoreLogic report in a minute, but definitely right now we're seeing investors dumping investment properties, especially overseas investors, and then investors trying to get in the market and pick up some of those properties right now before things get wild again. If you're in the market and you're on the ground every day, you know that there's a ton of people sitting on the sidelines. So let's move on. So here is the real problem, and that you were just covering, is prices are still up. Year over year nationwide, we're at 383,750 for the average home price in the US, and it's probably pretty close to what it is here in Florida. So in markets like Port St. Lucie, where the market's now running anywhere between low 300s to the millions now, you're seeing that the lower end properties are still selling and actually getting multiple offers on them. And then when you kind of go above that 450 mark, it slows down and you're not seeing that much buyers in that market because the rates are so high and the houses are still so expensive. But this is just a supply and demand problem. And it's something that you and I have been touting since this whole thing started, that unless supply builds, there's no way for a crash because there's just no inventory. But we are seeing some price decreases in certain markets. We're going to talk a little bit about that, but this is the problem. Housing is still very expensive nationwide, and especially in Florida. And now we got rates so high, it's really created kind of a weird situation.
Tremendous amount of pent up demand, though. A tremendous amount. So many people are just sitting on the sidelines waiting for rates to drop. I mean, it's something everyone's pretty much aware of, that they cannot raise interest rates like this and keep it for a suspended period of time. And it is cyclical. I think that most people understand that.
Right. Builder sentiment's up again this year. I mean, this month, because builders are just building like crazy because there's no inventory.
Right.
We're seeing that in our business. I mean, we've sold everything still. I mean, we sold 4 in the last 2 weeks, new construction, and we barely have any clients on the resale, and anything we're getting, and you can speak to this because you're doing the mortgages, is in that under 450,000 market.
Right.
But then you're doing some of the mortgages on the new construction because of your relationship with Mattamy, and you're seeing it. The prices are much higher there.
Right. And I think there's a difference, especially with Port St. Lucie, Lee. We're seeing there's a big difference between East St. Lucie and West St. Lucie.
Exactly. A big difference.
I think, why don't you cover some of that? Because I think
I will. Let's talk about it when we get to the CoreLogic report, because I think that's important, because I've had a couple of clients mention that to me. And so here it is right here. So if you look at this is top markets risk of home prices decline, and CoreLogic just put this out. When a few of my clients have asked me about it, especially in investors too. So you can see Lakeland, Winter Haven, Florida, Sarasota, Northport, Sarasota, Cape Coral, and then Port St. Lucie, right? I would agree with this to a point. So boots on the ground, friends of mine working in these other markets on the West Coast, my son being up in the Winter Haven market. There is all of these markets you're seeing here. I don't know about Utah. I'm not up there, but I would say that there's probably a fair amount of new construction there too. These are markets in Florida that have a lot of new construction. I mean, Fort Myers has a lot of new construction. Sarasota and Port St. Lucie, tons of new construction. And that's what's hurting the market. We've let a couple of listings go in Port St. Lucie and here in Palm Beach County this year because our clients just aren't willing to take the hair clip on them. And that the market's going to come back eventually and the house is going to be worth what it is. But if you want to sell a home right now and it's above that 400 mark or 450 mark in Port St. Lucie, above 500, 600 in Martin County, and under and above $1 million in Palm Beach County, unless you get up into these markets up into the multi-million-dollar real estate, the oceanfront, 10 million, that market, $20 million. That market's still moving because of the money coming into Florida, but these markets, there's a break in them. And that's, I think, because of the new construction and because of rates, it's hurting the kind of that center part of the market in every single county that we work in. And so I've seen prices come down because people that need to sell their home, sellers that need to sell, are going ahead and dropping that price where the house might be worth 610, 620, and they're going all the way down to 580, 590 to sell that house, and going in and taking the hit on it, where because they have equity in it and they can. But other folks that don't need to sell are either renting their houses or just staying in them.
The prices you just mentioned, Lee, I think it's important to point out too, as far as prices going down. A lot of times what I hear is, I think we're going to have another 2008, things like that. And we're not talking about 50% price declines. We're talking about
we're talking about 10, 20, 30,000 max. And I think that's a short-lived situation because again, like you were saying, there's a difference in Port St. Lucie. There's West Port St. Lucie and there's East Port St. Lucie. And on the MLS, they've actually split it. And because in West Port St. Lucie, that's tradition, which could be its own city. And that market is moving and prices are holding steady and going up, where you're seeing in the East Port St. Lucie, which is the older part of Port St. Lucie, those homes you're seeing the price drops over there, or people are just taking their homes off the market. So inventory is very low. And so when you're looking for a home and you're a first time buyer, where are you going? You're going into that under 400,000 mark, right? And that market is moving. So same way here in Palm Beach County, under 900, under $1 million, 900,000, you're seeing people buying homes. So I think this is a very short-lived situation, and I'm not the only one, because Shark Tank's Barbara Cochran predicts housing prices will go through the roof. We could have a COVID market again. And anybody that knows Barbara Cochran and has listened to her, she's not an idiot. She's very smart and she knows what she's talking about. And if you listen to this is something else that we've been saying for a while, and why, if you can afford to buy right now, it makes sense. If you can't afford to buy, don't get yourself house poor, stay in the rental. I mean, I'm telling my son that too. So, and you are too, you're telling your kids that, because rates are going to come down. But she says right now sellers are staying put, but they're not going to stay put if interest rates go down by 2 points. It's going to be a signal for everybody to come back into a buy like crazy, and the house prices will likely go up 20%. She said we could have a COVID market all over again. I don't necessarily think that she's off.
No.
There's a ton of people, and especially in markets like Florida, where we have still people moving to Florida, still coming in to the state because of jobs. They're going to, and in the growth we're seeing in different cities like Orlando, for example, which had no real industry except for the theme parks, is now got aeronautics and medical and all, and even tech companies moving in and brokerages moving in. You're seeing that because Tampa's filling up and there's no more room there, and it's gotten very, very expensive. And we're seeing the same thing happen in Palm Beach County and Port St. Lucie area and Martin County, just the Treasure Coast as a whole, where it's growing like gangbusters. And you're seeing that happening. And there's actually real jobs coming into that city for the first time. And still you're close to, 30, 45 minutes out of Palm Beach County, where you can work in Palm Beach County and make that drive back and forth and save $1 million on your home. So let's talk about how people can benefit right now in buying a home and what kind of programs that are available out there, Brent, because this is a big deal right now. There's a lot of stuff going on, especially here in Florida with mortgage rates, and let's cover that.
Yeah. So, one of the biggest hurdles, Lee, is the down payment. And so there are programs now. The Hometown Heroes program was exclusively for, first responders, firemen, policemen, and teachers, basically, and medical occupations. That's been removed. This has all been updated. $100 million has been set aside for this. And by the way, over 30% of it has been taken up since July 1st, by the way.
Wow.
So that's something I hadn't talked to you about yet. So very popular. It's up to $35,000 second. That's a second mortgage. There's 0% interest on it. It's non-amortizing. It just basically stays on your home until you either refinance or sell the property. So it really helps cover that first hurdle to purchasing a home. The grant, it's not a grant, the loan actually can be used for both the down payment and or closing cost, any combination. So it's a tremendous amount of money. It's up to 5% of the loan amount is what the maximum is, and it's a minimum of $10,000. So it's a great program to help get over that hurdle. There are some qualifiers. There's maximum income. You can't make over, 1.5 times the average household income in any county. So every county is different. But we're seeing most people, that are having in that first-time home buyer scenario.
Yeah, but that's a 6-figure income in pretty much the Treasure Coast and Palm Beach County. So all the way up through Florida, that's a 6-figure income.
140, 150, right? Exactly.
Yeah.
So max. So it's for first-time home buyers, and most of them would qualify for that. There's a couple new things. The 35-hour minimum as far as a work week. That's what they're looking for in the VOE. The biggest and
that's
best
verification of income, by the way.
Verification of income, right?
Yeah.
Verification of employment. That's right. So we need to make sure it's a Florida-based employer. That's the big change. So any employer that or an employee that works for a Florida-based employer that has a brick and mortar location here in Florida qualifies to apply for this program. So it's a game changer, and that's why it's going up. It's being gobbled up. Frankly, I see them probably extending it. But it'd have to be funded, but that's
right.
That's what we're looking at. I think it's a very popular program for that reason. We're working on a couple of people that were blown out. We were doing a lot of loans for teachers. And so we're offering this to janitors at schools, that type of thing. They weren't included in it. They kind of felt left out, administrators, because they weren't teachers. So it's any Florida-based employer and your employee that works for
if they own somebody works for a restaurant, they could be a waiter, waitress, because those right now around here making 6 figures. Bartenders, I mean, it's crazy money what waiters, waitresses, and bartenders are making right now.
Right. So. Right. And a lot of them are showing their income. Some aren't, those tips.
Right.
But we can do bank statement loans too. That's another hurdle. A lot of times with self-employed people, Lee, we see that all the time, where if someone's been in business for 5 years, that's a real loophole that we can show one solid tax return and get them qualified based on that as well. So there's solutions for these things, both income,
And on
down
this
payment.
program specifically, though, they can't have owned a home in 3 years. That's the
Right.
big one.
It's a
Right.
first
Now
time
they
home
can
buyer
be on
program.
a mortgage. They can be on the mortgage, and they can be on they can be on the house, on the title, but they couldn't have lived in it for the last 3 years.
That's right.
Correct.
That's correct.
And then let's see what else we got, Brent. Temporary rate buy downs.
This helps a lot of people. We know rates are coming down, right? And so at this point in time, one of the best strategies is with a seller concession, whether it's from a builder or from a seller in a resale type scenario, that concession, let's say it's $15,000, can be used to buy the rate down. There's 3 2-1s, 2-1 buy downs, 1-1 buy downs, 1-0 buy downs. There's several different types of programs, but basically it's taking the amount that you'd save. Let's say you did a 2-1 buy down. So let's say rates were 7%. The first year, it would be 2 points lower, the 2 of the 2-1 buy down. So your rate would be 5%. So they'd calculate the savings at 5% over 7%, and that concession can be used. A seller concession can be used to cover that from the lender's perspective. So it helps buy down that rate for that first year. The second year, it's bought down 1 percentage point. So it'd be a 6% rate the second year, and then it would go to the 7 and stay in the 7% rate from that point moving forward. The strategy then is, with these seller concessions that new builders have and the seller concessions and the resales, it's a great way to make sure you use every nickel of it, because you can buy that rate down during this high interest rate environment we're in. And so it's a great strategy because we know they can refinance. And if they refinance, they can get what's not used in the concession credit to them at closing. It's actually a credit. So let's say they did a 3-2-1 buy down. They bought the rate, it's expensive, all the way down to 4% from 7%, let's say. Let's say they're in it 2 years. The remaining savings on that last year would be credited to them at closing. So they actually get the full benefit that a concession, no matter what they do. If they refinance or they sell the home, they're still going to get the benefit of that concession.
And then on this, especially now, seller credits are back at full swing. I think I read an article the other day. It said 60% of all sales now have seller concessions. So seller concessions are back, and I know with our listings, people are asking for it, and they're at their magic number is 3%, which is pretty much what builders are offering. So on the resales, builders, they're asking for the 3% because that's what they're being told by builders are giving up. So and that 3%, that 3% would buy this rate down on a 2.1, right? A 2-1 buy down, right?
2-1 buy down, absolutely would. Right. So you get that payment as if it was a 5% rate. Let's say if the market's 7, let's say if it's 6.75, it would be 4.75 today. So on a 2-1
so you just
buy down,
need your down payment, your closing costs, get the concession from the seller, and buy the rate down.
That's right. It's a great strategy.
And then when they get approved for the loan, they're getting approved at the highest rate, though. Correct?
That's correct.
So they're not getting in a situation like these ARMs and things like that. They're qualifying for what they know what the real rate is, and they're just getting a lower rate.
That's exactly right. That's exactly good point, Leap. So they qualify. In other words, we're not stretching that borrower's ability to pay at all. They're
right. We don't want to get people house poor.
That's right. That's right.
Perfect. And then this is talk about, before we go this slide real quick, talk about the situation with the reverse purchase, because most people know about a reverse mortgage. You can explain that a little bit, but explain the reverse purchase, because this is a really neat program you have, and it really for folks moving into Florida, retired, or they can do a reverse purchase if they want a little bit more house than what they sold, because Florida real estate's starting to catch up with the rest of the country now. So talk about that.
It's a great program, Lee. What we do is we're seeing two things happen when someone retires from, let's say, Ohio and they move to Florida. Two things happen: their income stops, right, and they can't qualify for income, use that income any longer because it doesn't exist. They look at what the lenders look at what your current income is, and then you're selling your home, and you have this cash, and you'd like to keep some of that cash. You don't want to use all the cash to put down on a property necessarily. So what we can do is we can actually take, let's say you have a free and clear home, it's $500,000. You sell it for cash and you have $500,000. You want to move and you want to purchase, and let's say in tradition, and you found the perfect home. You don't want to put all your $500,000 down on your property. You want to maintain some type of, padding there, as far as for reserves and emergencies, that type of thing. Well, a reverse mortgage is not just for refinances. It's not like the last, stop, before you sell your home or, leave this earth. It's actually a financial instrument where you can put, let's say, $250 down. You take half of that, put $250,000 down on the property. You retain the $250,000 in cash, and that's your kind of your padding, for emergencies. But there's no income qualifying. So if you don't have a job, if you have Social Security that pays the taxes and insurance, you can qualify for that loan. And the whole idea of paying cash is so you don't have a payment. Well, with a reverse mortgage, you don't have a payment either.
Right. And the biggest fear in the reverse mortgage is, and this is what I hear from everyone, is they're going to take my house. Right. And I have many friends that have reverse mortgages, and you've done tons of reverse mortgages. They don't take your house. Tell them how it works out. So the house is yours till you pass away. And then it would, if you have it willed to your children, tell them how that works.
Yeah, there's many options. You have 6 months initially when you pass away or leave the home. And so your heirs can refinance the house. You can sell the house. Any number of options that way. As far as whoever you want to give the property to, you have to, refinance any balance though. Then you can give a gift of equity. In other words, the home is going to be worth, let's say it was $500,000, 20 years later, it's worth $900,000, and the balance has gone from 250 to, let's say, 450. There's still equity there. You can give a gift of equity and they refinance the 450 and they're fine. Or you could sell the property. You have 6 months to do that. And then
when you sell the property, you get to keep the profit. You just have to pay. It's just like paying back a regular mortgage.
Right.
The same way, but you just have to pay it back and you keep the rest of the equity.
That's right. You still are on title. Nothing changes that way. The only thing you do have to do, you have to pay the taxes and insurance, and that's true of any home you own.
Right.
So
and that's really keep the residence up.
You have to keep the residence up. You can't let it go into disrepair. So those are the things you need to do. And there's all sorts of qualifiers. It's a government-based loan. So they're very careful to make sure this is a product that's good and it's appropriate for the borrower. And it's not putting someone in a difficult situation. They're very careful to do that. So that's why FHA came in and started insuring these loans. So there was some abuse years ago. And that's where you get some of the bad blood and the rumors that, they want to take your house and things like that. So, after that first 6 months, once you pass or go into a long-term facility, there's additional 90-day extensions that can be applied for that are pretty much always given, frankly. So, up to a year to resolve the situation and close out the estate or to sell the property or give it to one of the heirs, have them refinance it. So several options, but that whole time you don't have a payment. So the reason I'm hearing people coming down there and they want to pay all cash is they want to not have a payment. Well, with the reverse mortgage, you don't have a payment either, and you still keep your reserves and savings. And some people are pulling, and paying taxes on IRAs and retirement accounts too, because there's a tax when you pull it out. You can leave those intact and growing for your heirs. So there's a lot of different strategies. You definitely want to talk to your financial planner, a tax advisor, for those types of scenarios. But from the mortgage perspective, it's a great tool to have plenty of reserves in your retirement, not be, house poor where your house is paid for, but you have nothing left. So I love that program. We're seeing more of that, more interest in that as people begin to understand it, and some of those misconceptions and myths are corrected. So
Yeah, I think
it's a
if
good
this is
program.
something people can listen to, they can reach out to you and talk to you about this, and you can share more with them. But I think it's a
Yeah.
great program, especially with moving to Florida. Let's say you're moving from somewhere and the house isn't as much, but you're getting priced out of the market. Where we have clients coming down right now, and they're cash, but they're right there on that edge. And if you're trying to buy something new, the kind of the bottom of that, unless you're buying a townhome, is about 450 now. So it's not cheap like it was. We don't have $350,000 homes falling off everywhere anymore. Port St. Lucie's gotten expensive, and if you come into Palm Beach County, it's really expensive. So I think
Well,
it's a
Lee, I'll tell you
really
what.
good way for people to be able to get the home they want, and not have a payment. And that's what they're looking for. They're looking for not having a payment.
And I'll tell you what, there's one other attribute of this loan that most people don't talk about. You get about half of the funds up front, and then you can get an equity line of credit that grows at the CPI rate. In other words, I'm just doing one right now. She's going to receive $119,000 in a credit line that's going to grow. If she doesn't tap into it, it grows right now at a rate of 8.5% per year. So in the event of an emergency or something like that, she has that equity line to fall back on. And I don't know about you, but I owned a house in 2008, and we had a second mortgage, a line of credit. And everyone that I personally knew and talked to, they'd all had their equity lines canceled.
Right.
I had a friend of mine called to extend it, to increase it, and he goes, "Thank you for calling. We haven't called you yet. We're going to eliminate it." And they eliminated it right when he wanted it. So because there were bargains to buy and things like that. So he's looking to purchase real estate because it had dropped. So that 2008 was a different scenario. So in a
And we're
worst
definitely
case,
getting back into that situation now with
yeah,
the debt being so high and the Fed tightening up.
$120 billion of debt is going to be auctioned this week by the federal government in 2, 5, and 7-year treasuries. That means $1 million, 120,000 times. That's how
Yep.
much debt we're auctioning off this week. So, is that, it's nice to have that locked in, and it's government insured. So in other words, they can't change the contract. They can't.
Right.
And so it's a great long-term strategy to know that you have a padding to fall back on, reserves to fall back on, that credit line if you need it for education of children, that type of thing, emergencies. And so
Or just
helping.
retire and be happy, not have anything to worry about, and be in the house that you want to be in. I mean, I'm watching folks these days with especially new construction really trying to pinch the penny and get into the house that they want, and they're ending up buying less than they wanted. But with this, they could get what they wanted and still have no payment. So it's a great thing. People, like anybody listening to this, should definitely reach out to Brent if you're interested, or have a family member that is interested, or they're trying to move down. Definitely something to look at. You have some cash in the bank, you don't have enough to purchase, definitely something to look at. If you're over, and in the years and age is what it's
62.
what's the age? 62.
62.
62. So you're almost there.
62. I'm
Yeah,
almost there.
you can do a reverse mortgage pretty soon,
I
bud.
will.
Not have the
That's the
payment.
plan. That's the
With
plan.
all those kids that you have, you just keep tacking them on.
That's
Might end
right.
up with 2 or 3 more over the next year. I don't know.
That's right.
Your wife keeps
That's right.
bringing children home.
I know she does. I don't know what's up with that. Gotta slow her
All right,
down.
so let's get back to let's wrap this up. But I just wanted to go through this Florida homeowners program. So I've been getting weird calls from clients that are moving to Florida from New York, New Jersey, mostly saying Florida has no more insurance companies. There's only 3 left, and the insurance is about to skyrocket, and it's going to ruin the market in Florida. And I don't know where this is coming from. It's probably coming from the media, though, I would say. Absolutely not true. We're going to do a video with our insurance agent, but I talked to him today, and when I mentioned it, he hadn't heard about this yet, and he kind of laughed. He's like, "Lee, I'm doing a mortgage right now. We got about 18 companies in around Florida. If you get into the good or better policies, you're probably running maybe 5 or 6, depending on where you are. There's not that many companies left, but DeSantis is actually working on that to bring more companies in. So this is a really great program. It's being hit pretty hard right now, but you sent this to me, and this allows for someone to apply to the state. They come out and do a hurricane inspection on your home, and then there's grant money to help you bring it up to code where your insurance would go down. And the biggest two things is that you have a hurricane garage door, you have hurricane shutters, and then you have a roof that is under 10 years old. If your roof is over 10 years old, you're going straight to Citizens, and Citizens is about to go up 20%. I will tell everyone I heard that today. So they're going to have a 20% increase, but they were never supposed to be the insurance company of Florida. So what the governor's trying to do is use some capital, use programs like this to bring more insurance companies into the state and get more people insured. On our side of the state, we really don't have the flood insurance issue like they do on the West Coast. So you get close to the water on the West Coast, you're going to end up with flood insurance. That's not cheap. I will tell people right now that it could be, client I'm working with right now, it's $2,500 just the flood insurance a year. So not cheap. They're spending about $5,000 altogether, and that's up in the Panhandle, but still people are moving in like crazy. It's unbelievable. But that flood insurance, but on our side of the state, we don't have the flood insurance situation. The flood zones aren't relevant, or really, there are not a lot of them here. Even if you're closer, a lot of people think because you're closer to the intercoastal or the ocean, you'd have being a flood zone, but you're not, because we don't have that surge that the Gulf has. So insurance over here is not that bad. I mean, we're insuring houses right now, and you can attest to this because you're calling their insurance agent. I mean, some of these policies are $1,400 a year, and some of them are cheaper. Especially with new construction. If you're buying new construction, you have most of these homes are impact glass. They're concrete block to the top. They're using Miami-Dade code now in Martin County and St. Lucie County to build these new properties. And more importantly, they have new roofs. So, your insurance is going to be very affordable comparatively to, what people are saying. I just wanted to get that out.
Lee, you have such a good construction background too. I've seen you walk people right out of homes if there was a roof or structural issue, that type of thing. And it's really good to have a solid agent in your.
I appreciate that, Brent.
Corner. Absolutely, man. I've seen you so many times where if somebody wanted a house and you were very forthright and telling them that's fine, but you're looking at a $30,000 roof, with the next.
Well, one of the good things about you and I's relationship, and I think this is important, and when people are looking for an agent, making sure that the agent has, if they're getting a mortgage, they have a relationship with the mortgage company, and that, that pre-approval just isn't a pre-approval. What is the taxes on that pre-approval? What is the insurance on that pre-approval? Because if you're pre-approved for $450,000, but you're looking at houses with roofs over 10 years old, your insurance is going to be somewhere close to $3,000 a year, $2,500 to $3,000 a year, and it could blow you out of that DTI. So it's important to know that and look at these types of things, because obviously if you're buying new, taxes are going to go up from the person that you're buying from, because the tax situation's changing, because the prices have gone up so much and they're homesteaded. That's why when you're looking at homes, you see these low taxes. You're not getting those taxes. You're getting the benefit of the closing costs being less, but the taxes are going to go up on you when you buy that house to whatever the assessed value of that home is going to be, which is somewhere around 85 to 90% of the price you buy is usually the assessed value, I'm finding. So your assessed value is going to be assessed, and then you'll be able to homestead it within, if you're a new purchaser, in 6 months. If you're purchasing somewhere else from Florida, you're going to have the portability situation. So you're going to be able to port your taxes over from where you were, and that's going to bring your tax rate down. Some cases significantly, I've seen.
Right.
So this is an important situation. Anything else you'd like to add before we jump off with everybody?
I think that you covered it, Lee. Great job today.
Yeah, I really appreciate you joining us. Any questions you have for Brent, his information's in the information section below. please reach out to him directly, and he would be glad to answer any of your questions. If you want to reach out to me first, that's fine. But if you're looking for a mortgage and looking to move to Port St. Lucie or the Treasure Coast, Brent's full-time mortgage broker. And mortgage brokers are great right now in the market because they have multiple lenders to go through. So if you're not getting approved with one lender, there's another lender to take you to. We see this happening all the time, where in these direct lenders or banks, they don't have that opportunity. So they're just turning people down. And then you feel like you can't purchase a house. And then I take that same client over to Brent, and we're buying a house in the next 30, 45 days. So definitely reach out to Brent no matter what you feel. Let him talk to you. And as you always say, Brent, you've never found a person that can't buy a home. Just a matter of time sometimes.
Just a matter of time getting them there.
And Brent will help. Right. And you'll help with credit issues or any problems they have. I mean, we're going to find a way to help them. And we've always been that way. All right. Absolutely. Well, I'm going to let you go. And thanks for joining us.
Thank you, Lee.
So I hope you enjoyed the video. If you did, please give me a thumbs up. I really appreciate it. And it helps grow this channel and help more people find the right home here in Palm Beach County and the Treasure Coast. And if you have any comments or questions, please leave them in the comment section. I love to hear from you, and I'll always answer them. And again, if this is the first time you've been to our channel, don't forget to slap that subscribe button right there, ring that notification bell so you don't miss any of our real estate tips and tours. And you can watch our next video on the real estate market in Port St. Lucie and the Treasure Coast right there.